What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It's October 25th of 2021. We had a pretty legendary day of price action today. We had a bond rally, and then we had mega cap earnings after the bell. We're going to discuss all of it. Let's start off with our box scores. We had the S&P 500 finishing up 1.6%. We had our NASDAQ QQQ finishing up 2.07%. Small caps were up 2.73%. Very nice performance there. Our dogs of the Dow, which had actually been leading the pack, actually were a laggard, only up 1.09%. The ARK Innovation ETF finally was our big winner, up 6.72%. And the TLT, Long Treasury Bond ETF, was up 2.91%. Now, this, in my opinion, was a huge catalyst as to why the market went higher. Prior to today, we looked at the long bond, the 30-year Treasury future, and of the prior 14 trading sessions, there were 12 big old red candles. It was like the opposite of a parabola. It was just down only every single day. With that down only action in bonds, growth stocks were just getting pummeled. And so we finally got this bounce in bonds, and therefore we had some very nice dynamic price action where the growth stocks actually had a very nice rally. In terms of the day's range, almost everything closed at the very top end of the day. Volatility declined across all of these indices, and we had very nice breadth, 89% advancers in the small caps, overall up volume of 87%, and our trend model remains at a +3. Remember, the trend model will set you free. There's plenty of variables that you can dive into, ranging from like economics to fundamentals to all this stuff. In terms of managing risk, the trend model really is very helpful to my own process. All right, let's talk about today's economic data. We had some housing data that came out. The house price index month over month came in negative 0.7%, and that was below the forecast of 0.3%. And then our consumer confidence data came in lighter than expected. So remember, you're probably seeing all these different narratives, and pretty much the way it goes is most financial commentators are like strategists. If the market was up that day, usually they're saying something positive. If the market was down that day, usually they're saying something negative. But in terms of us practitioners that are actually trading the market day in and day out, let's just back up and remember what's really been driving the market. Inflation has been driving the market. And the Fed's working theory is that if the economy really softens, that'll likely help the inflation outlook. And remember, owner's equivalent rents, that is what has been contributing to the really high CPI prints. So the fact that the housing market is really showing evidence that it's starting to slow could actually be bullish, and that it could lead to, continued rally in these bonds, and with that, some buoyancy for risk assets. I also want to point out, we shared yesterday this letter that the Democrats sent to President Biden, basically saying, pare back the military and economic support for Russia, or not for Russia, excuse me, for Ukraine fighting Russia. Now, this piece up here that I'm scrolling over, this is brand new from today. Russia has notified the United States that its annual nuclear exercises have begun and will include launches of nuclear-capable missiles. Biden says Russia would be making a mistake by firing a tactical nuclear weapon. The only reason why I bring this up is because this geopolitical conflict has also been driving the market and driving the inflation outlook. So I'm going to be keeping you updated as we get new information on that front. Now, we did have some big earnings after the bell. We had Texas Instruments, whose chips go into everything from home appliances to missiles, dropped nearly 6% in late trading after its quarterly forecast signaled that the semiconductor industry slump is spreading beyond computing and phones. So definitely keep this in mind. Could we see weakness in the semiconductor stocks tomorrow? Absolutely. There's some analysts saying, semiconductor industry is troughing. Who really knows if that's correct? This new data from Texas Instruments is telling us that this industry is getting worse. Now, we also had poor earnings out of Google, and Google had a miss. Microsoft beat expectations but reduced their guidance. So we are seeing from the mega cap tech stocks that perhaps the economy is softening. I mean, Google definitely makes a lot of revenue from ad spending. We noticed Snapchat also got crushed. And we'll have to see how the rest of these digital advertising companies do. But it does seem like we are just getting repeated signals that the economy is indeed slowing. And we're getting repeated signals that inflation is peaking. So remember, the Federal Reserve policy in response to inflation has really been driving the market. Earnings have not been driving the market. So it is important to note, I think everyone now, probably the people that were super bearish got excited at the end of today. And now they get these bad earnings reports. So now I'm sure everyone's going to be bearish again tomorrow. As the market gaps down, everyone's going to think, oh yeah, the rally's over because the earnings were bad. And they're not really aware of the drivers behind this market. VIX Futures term structure actually uninverted today for the first time in about a month, which is good. Finviz Heat Map, you can see we had this really nice positive market action before we got those semiconductors earnings. We saw Nvidia was up over 5%. Tesla, the Twitter deal is likely to close this Friday. I think, it's like a 99% chance of closing at this point. And that was a big overhang on Tesla stock. No one knew if Elon was going to have to sell his Tesla shares to fund buying the shares of Twitter. So this is actually good news. And I mentioned it last night. I was on one of the Wolf Financial Spaces. This was one of my picks for the week, basically saying with that overhang off the stock, this one could really bottom. But now we have Google that's gapping down. We'll go to that chart in just a moment. And we have Microsoft that is gapping down. In terms of sectors, what did we have as our top performers? Say home builders were up 4.35%. What else do we have? The ARK Innovation ETF up 6.72%. I believe that was our big winner for the day. And really just a broad-based market rally. Oh, another sector that we have to note is the blockchain. Sector was up 5.43%. Style factors, what was the big winner for today? We had high beta up 3.03%. That's definitely pretty risk on. In terms of trades, we closed out 33% of the Suave common shares for $300.39. We had paid $274.86. Name reports earnings in about 2 weeks. We saw the market was rallying pretty heavily. We had just added this position yesterday, so why not close out a piece of it into the strength? And then we also closed out the TQQQ, which is the NASDAQ triple leveraged ETF. After seeing these earnings after the bell, I'm very glad that we closed that out. That was a big core position for me. Binary event risk heading into Microsoft and Google earnings after the bell today. Trading is all about analyzing risk and reward. It's not really about predicting what's going to happen next, but a lot of it is really just identifying and being honest with yourself when you have an unknown event that could really mess up your positioning. So for us, it's like, okay, I'm long TQQQ. At one point, I was down like 15% on this trade. After this big rally, we got a very small winner on it. It was like a 1% winner, nothing crazy at all. But it's like, okay, market's just ripping into the earnings. Well, what happens if the earnings are bad? And the earnings did end up coming out pretty bad. It's not like they had to. If the earnings had come out good, I think this is actually the toughest concept for traders to understand. If the earnings came out good and the NASDAQ was gapping higher tonight, this would have still been a good decision because we don't know actually what's going to happen. So it's a little bit of a nuance, but it is what it is. And then in terms of options trades, we closed out the Pinduoduo March of 2023 70 strike calls. For 318, we had paid $12.90. Small position here, just a one-star trade. And you can see this trade, it was meant to be a flyer in case the Chinese stocks made a move. In terms of this group, it was so beaten down, I didn't want to add an actual common stock position because I knew I could lose everything. So I just added a small flyer via options. That flyer did not work out. So I wrote here, while we may get some bounce action from here, I think the odds of Pinduoduo reaching the break-even price of $82.90 are slim by March. It's not worth waiting that long just to try to break even. This is the same exact concept as what we just talked about with TQQQ. PDD group is really beaten down. You want to add some flyer exposure there just in case something good happens. Now, this trade ended up being a loser, but was it a bad decision? I would argue it was not, because at the time that this trade was put on, we could have easily gotten some good news on the Chinese front and things could have gone, way better to the upside. But I wanted to cut it because now, after getting that river card that we got the other day, I waited for the small bounce in the Chinese stocks and then just said, let's cut off this loser. There's no point in having this capital still deployed in this group. All right, let's dive into the good stuff. Let's go to the S&P 500. Now, take a look. Again, if you're on your Twitter feed, if you're thinking about thoughts of which analyst said what and who's doing what and all that stuff, like you really get confused, let's just forget everything and look at the chart. Let's forget even that the earnings come out before we go to those individual stocks. If we're just looking at the index, what do we see? Well, we broke into, first of all, we broke the teal downward trend line. We're above the short-term moving averages. We got very close to a test of the 50-day simple moving average. And right now we're trading in between the 50-day simple moving average and the 5-day EMA. Remember, we talk about this all the time. The market tests that 5-day EMA almost every single day. So would it be abnormal for us to trade down to about 3,800 tomorrow? No, absolutely not. Again, these tests of the 5-day exponential moving average happen all the time. Also, we're starting to get, I don't want to say like too extended from the 20-day simple moving average, but it wouldn't be the worst thing in the world if we got a couple days of consolidation. That way some of these short-term moving averages could actually catch up to price. So that's really the way that I'm thinking about it. In terms of the technicals, nothing has really changed. And as of right now, we're still in rally mode. If we get a pullback, that's perfectly fine. That's kind of par for the course. But of course, if you're looking at the talking heads, they're probably like, oh my gosh, we were super bullish into the close. Now we're not bullish. Oh my gosh. So it's good to just like think about your own system and think about your own trading process. Does this price action still fit into it? The NASDAQ is down 2% in the after hours, but same deal, right? After these companies reported earnings, we're now trading right back to where we were at the start of today's trading session. We're testing this monthly value area low. Russell 2000 is actually faring much better in the after hours. The Russell 2000 is only down 0.12%, and we are trading right around this 50-day simple moving average. And the Dow Jones is down just 0.22% in the after hours. Now let's look at the bond market, because I think this is super important. I do not think that mega cap tech earnings are going to determine if the market continues to rally into the end of the year. I think that's sort of like intuitively you'd think that would be the driver. But I really think it's all about the dollar index, inflation, Fed policy, and the bond market. Today, we actually got a very nice bounce in these 30-year treasuries. And look how many red candles we've had. This was actually a change of character to even just get one good bounce day for bonds. Now, we can't take it for granted. We'll have to see what the river brings into tomorrow's session. But I can make the argument that Google and Microsoft and Texas Instruments whiffing their earnings report actually shows that the economy is decelerating, and that's more reason for a bond rally. And one of the big reasons why the equities have struggled so much is because we've had such highly volatile bond markets. So we really don't know heading into tomorrow's session if these earnings are a huge negative catalyst, if they don't really matter. I believe tomorrow is all about just where does the market, not where does it open tomorrow, but where do we close tomorrow? And what does the action look like under the hood? I know for a lot of traders, that's a very difficult reality where they're like, man, I just want to trade on the open and just make a bunch of money during tomorrow's trading session. Like, how do I make money tomorrow? But it's like, honestly, for tomorrow's session, tomorrow's going to be a great day to work on models, work on trading process, work on looking at your prior trades, anything that is not executing on trades and pulling the trigger and finger on the trigger happy, whatever you want to call it. That's probably going to be a good use of tomorrow. 10-year treasuries, we're seeing the same exact thing. And the dollar index, check this out. This is also great news. Because remember, the market was languishing as the dollar index was ripping to new highs. Well, the dollar today just had a big pullback. Why was the dollar rallying so hard? Because there's signs of global recession everywhere else other than the United States. So it was this really perplexing situation where it's like these other countries, they look so weak. They can't really tighten monetary policies so much. But over here in the United States, we're still so strong that the Fed has to keep going really fast. And it was just leading to all this financial instability, the dollar rallying, the whole 9 yards. This could actually end up being a good thing that these earnings whiffed. Maybe not for tomorrow's session, but on a swing trading basis. So we have to stay open-minded. Now, before we break, I'm just going to show you some charts from today. ARK Innovation ETF. Let's see how this one does tomorrow. Let's see if Tesla can pick up some of the slack from Google and Microsoft. But the ARK Innovation ETF closed above the 20-day simple moving average today, which is good. And we closed above this teal downward trend line as well. Let's see if we can hold this tomorrow. Now, I also want to show you, where is this? Let's take a look and just assess the damage in Microsoft. Microsoft, after guiding down, is down pretty big. The implied move for Microsoft, let's just double check it over here. Where was this? Implied move for Microsoft. This is data that we share with Pristine Capital members. Yeah, the market implied move is 4.7% to the plus side of the minus side. We actually have a slightly bigger move than that in the after hours. Definitely worth monitoring tomorrow. Again, see how the stock closes, not how it opens. And Google is down about 6% in change, which is right around the market maker implied move. So again, if you're just looking at the headlines, you see, oh my gosh, Google's down 5%, huge end of the world, but the market makers imply that the stock could be down that much. With that being said, that about does it for today's market recap video. Hope you all enjoy your evening. I definitely have some work to do tonight in terms of scanning and screening the market. We'll be posting all of that for Pristine Capital members. Have a good one, everyone.